Hey, everybody. Welcome to today's live episode of That Crypto Show, brought to you here from the PrimeXBT Trading Academy studio, live from Berlin. I hope everybody's doing great. I hope it's not as hot from where you are watching as it is currently here. We really have some crazy temperatures here in Germany, and my German genes do not bode very well with those high temperatures out there. Nonetheless, of course, the markets never sleep, and we want to talk about trading today in more detail. Actually, we want to talk today about scalping and day trading the markets. So a topic that was already requested very often by many of our viewers, which I can understand. So I want to honor those questions, obviously, and talk a bit about scalping, about day trading. So scalping, day trading means, of course, trades that are executed on a very short time frame, for example, on a 5-minute chart. So this is the one you are seeing here in the background at the moment, Bitcoin US dollar 5-minute chart. So where you try to profit off very minor price differences. So you're not aiming, like with swing trading, for example, to gather a couple of thousands to kind of harvest a move like of a couple of thousand US dollars over the course of maybe weeks or even months in Bitcoin, for example, or other cryptocurrencies. We are talking here about several days, up to 100, 200 days really per day, where we try to scalp out of a market here $100, then maybe $200, $300, $400. And you do that very often. So the range really goes there from, let's say, 5 or 6 trades up to some systems that use that really do like several hundred days trades per day there. And so the bandwidth really is very big there on what scalping day trading can mean. They all have in common, however, that usually by the end of the day, you have all positions closed. And then the next day, when you turn on your trading engine again, your trading setup again, open your laptop and so on, you start all over from a fresh start again. Okay, good. I see that some people have joined, so maybe you're watching this live on either YouTube, or I think we are also live streaming on Twitter again at the moment. Doesn't really matter if you are watching a recording of this. If you have any questions, do not be shy to either post them here into the chat during the live recording. We'll take at the end of this stream 5 or 10 minutes to answer some of your questions. If you're watching a recording of this, of course, leave a comment underneath with your question, and I'll make sure that I answer your question. There are no dumb questions when it comes to trading. You know, everybody has to start somewhere. So don't be shy. After all, this is meant for you to, give you kind of a head start to help you a little bit with your trading career for the future. So I see first questions already popping in there. Great. FOMC, I'm going to comment on that later. Don't worry. So I thought really very long and very hard about whether or not we should actually talk about day trading and scalping. I know a lot of beginner traders are very interested in it, but it's a little bit like let's say the most difficult area of discipline that you can do when trading. So it's a bit like when you just start to play soccer, and then suddenly you want to play Champions League already, whereas maybe your experience and your technique is only at a level yet that is enough maybe for some local or regional soccer league. So be aware of that. You're really competing there with all the professionals out there, professionals like hedge funds, professionals like investment banks. I'm talking about Goldman Sachs, JP Morgan, and so on and so forth. Other professional traders like myself, for example. And usually, especially those institutions, they have a lot of budget every year, from $1 million to several hundred million US dollars, that they are investing into exactly this day trading and scalping crypto markets or other markets out there. So you need to be aware of that. A lot of stuff that work on higher time frames, especially when it comes to risk reward, do not work on lower time frames anymore. Nonetheless, I know it's attractive because there's a lot of action, and there are some general things that you can do in order to, become more successful than you probably are if you're just jumping in there blindly. So the first thing you need to have as a setup when you want to scalp the market is that you need to have a good charting software. I'm personally at the moment using TradingView here. You can, of course, also, for example, use here the charting software of PrimeXBT. It depends on how complex your day trading system gets by the end of the day. PrimeXBT is also working on an update for the charting software here at the moment. I think it's already live for the trading contests and will also go live for the normal trading engine probably in a couple of weeks, maybe maximum 2 or 3 months. So that is coming. Until then, I personally work with for my charting with TradingView. You'll find a link in the description, not only for TradingView, for everything here that you need in order to start with your trading. So that is important. Second thing that is important, you need information for scalping. And by information, I mean you need to be aware at any time what is going on in the market. And by that, I mean what is important at the moment. How's the sentiment? What are especially the professional market participants, the institutional traders out there looking at the moment? And this is something where you either every morning can sit down and go through the news. However, I've just last week, also set up a Trading Academy Telegram channel for that. You'll find the link also for that in the description of this video, where I really on a daily level or on almost daily post updates about what I think at the moment is important for the market, long term and short term, what market participants are looking at. One of those things for sure, FOMC, which is going to be in around about 1.5 hours. And this is also the reason, for example, why we don't see a lot of movement. However, when the minutes are released, we are going to see a lot of movement. So something to prepare kind of your day for, what is coming up later, what market participants think at the moment, what the trend of the market is, and so on and so forth. So feel free to join them. It's, of course, totally for free. No strings attached there. We also have the special promo codes always that you do not find anywhere else. And in the future, we will also have trading contests exclusively for members of the Telegram channel. So everything if you go here on the trading platform to contest, you'll sometimes see here those that are with a lock. Those are private contests. In order to enter them, you need from the community that does that contest always a password. So we are going to have something like this for members of the Telegram channel, Academy Telegram channel in the future as well, where of course you can also win great prizes, and it's going to be a lot of fun. Of course, you will be able to learn a lot of stuff and try out the things that I'm trying to teach you here. So, and now we are really going to start. Last comment here from my side. Please leave us a like, subscribe to the channel if you like what you are seeing. And this is, of course, the greatest motivation for me always to continue with things like this. And yeah, without further ado, let's get started. So like I said, you need some special indicators that are depending also on the market phase. You also need a broker that can execute your trades very fast. And that has low commissions. That's why I personally also trade here my own account with PrimeXBT because the general fee there for example, for Bitcoin is 0.05%. That means, for example, if Bitcoin is at 24,000, you buy 1 Bitcoin, you pay a fee of $12 one time for buying. If you close your position, another time for selling. So, for example, $24 in and out. If you trade a lot, you'll get the deductions on those fees. If you want to have a little bit of a head start, you can also use a cool promo code we have at the moment called The Room. So you go here to margin, to your account, and you have to enter here the room like this and activate, and that it will appear here. So I tried this a while ago already. You see here trading fee discount of 50%. So instead of $24 in and out, you would only pay $12. save $12 always. If you do that 100 times a day, it's $1,200 more for you. So that is really, really significant. I can only highly advise you to try that out. So one thing, in my opinion, that keeps most beginner traders out there from becoming successful when scalping the market is, first of all, there's a lot of noise. So not all the candles that we are seeing are equally important. Then everybody's always looking for the so-called holy grail indicator. So an indicator that is always correct, shows you exactly where the top is, where the bottom is, and has a success rate of 100% or nearly 100%. And something like this just does not exist. And it's a mistake also if you are using one indicator for every market phase. One indicator for every market phase. So some people, for example, think, oh, I'm going to use the RSI. Some people think I want to use moving averages. Now, those are totally different indicators. The RSI is a so-called momentum-based indicators. We'll get to that in a moment, what that means. Moving averages are so-called trend-following indicators. The thing is that trend-following indicators, for example, do not work in market phases where we have a sideways market. Whereas momentum-based indicators, like, for example, the RSI, do not work very well in trending markets. So whenever you have an uptrend or a downtrend, you will notice that something like an RSI, relative strength index, or, for example, a stochastic, which is also momentum-based oscillator, they do not work very well for those trending markets. Then again, you want the trend following indicators, and this makes things difficult. So just because of this, be prepared that the indicator of your choice will not work in every trend phase. So in my opinion, you probably will also be already more successful than 90% of other beginner traders out there is if you are able to identify which trend phase is the market in at the moment. And what I usually do is I choose my time frame where I want to day trade on for the day. So for example, this is a 5-minute chart of Bitcoin US dollar. Now, in order to identify the current trend, I go to the next higher time frame. And don't be confused here. If you do that on TradingView, the next higher time frame would be 7 minutes. However, I want to go to 15 minutes. So I'm talking about the classic time frames you normally see on charting. That is 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, monthly. So in this case, I want to go to a 15-minute chart, which I've opened here already. Now, what I'm going to do here on the 15-minute chart is I just want to identify what trend is the market currently in. Are we in a sideways trend? Are we in a downtrend? Or are we in an uptrend? Now, since we are talking about scalping and day trading, I'm not so interested in the whole chart. I'm interested in what happened recently. Be aware this is a 15-minute chart, so every candle here is 3 candles on my 5-minute chart. And for example, here I would now say, well, okay, this looks for me like we are in a downtrend at the moment. Since this large candle, we made lower lows and lower highs, so pretty obvious that it's a downtrend. All right, now I've identified that we are in a downtrend. So I go back to my 5-minute chart then and think, okay, we have a trending market, a downtrend. I should work with so-called trend following indicators. And one of the most basic trend following indicators are moving averages. So let's, for example, take a moving average here. Just a simple moving average. I'm going to make this a bit bigger for you. So let's have, this is, I think like this, you're probably, I should be able to see that well like this. Now, I don't want to have this one too short. So the standard vanilla moving average here on TradingView has has a length of 9. So it bases the average of the last 9 candles. That's, in my opinion, too short. So I usually like to work with a 50 moving average. 50 means the average price of Bitcoin of the last 50 candles. And what you can see here now, remember, I identified we are in a downtrend at the moment. You can see every time the price comes close to the moving average, like especially here, it honors the moving averages and goes down again. You can also see that here. It just happened recently. We don't know if we're going to have a cross now. So a valid strategy here would be downtrend as long as the price is below the moving average. I want to, for example, just trade short positions. And I could do so, for example, every time the price comes close to the moving average. And then I would put my stop loss just above the moving average. So for example, here or here. And, I could always place a stop loss here just over there in case we break out and the trend changes again. Now, one thing I want you to notice is, so we just said this is a downtrend, right? If we go a little bit further back on the 15-minute chart that is now again here, you can see that before that downtrend, and let me put this in a different color, here we go. And before we were in a downtrend, we were in a sideways trend. That was actually for a short time frame for quite some time. And I want you to notice now what happened in this sideways trend if you would have used a trend following indicator. You can see here, first of all, you probably would have said something like, okay, every time the price goes below the moving average, I want to short the market. If it goes above, I want to go long in the market. However, you can very clearly see the price is very choppy, going above and below the moving average. So it doesn't really give you, in this case, an indication what to do. And this is because those trend following indicators do not work very well in sideways markets. So if you take this to the heart already, as I said, you're going to be more successful than 90% of beginner traders out there. So always start by identifying the current trend on the next higher time frame, and then choose your indicator accordingly. Are we in a downtrend? Well, okay, I'm going to use more trend following indicators. Well, we are in a sideways trend. Well, I shouldn't use trend following indicators. I should use so-called momentum-based indicators. Now, what are momentum-based indicators? The very typical momentum-based indicator is the RSI, and it's a super old indicator. I use this one often also on my live streams because I think it still is a very good indicator to use. And so we have that one here. Let me just take out the moving average here for you. So, and now let's look here at the sideways trend. So general rule of thumb for the RSI is always, if you want to trade it just plainly by the book, how it was meant to be, if RSI is at or above 70, you should prefer short positions. If it's at or below 30, you should prefer long position. You can see in this last sideways trend, it didn't trigger trades very often. However, there were some occurrences, for example, down here, which corresponded to this down here. Then we had something here, which was a pretty good indication there. If you want maybe this, although it didn't really touch it. Obviously, there's not a solid truth, like this is how you have to do it every time. You kind of have to get a feeling for that. Or is the volatility very low? Well, maybe then I use trigger zones not at 30, maybe at 35 already, or at 65 instead of 70, and then so on and so forth. What you can see, however, is here's another one, which was around about here. Then it went here below, where you caught really the bottom almost, and so on and so forth. You can see here in those sideways trend, momentum-based oscillator, momentum-based indicator like the RSI works much, much better than a moving average trend following indicator. However, if we go a little bit further, you will see once we were in a downtrend now, we also had the RSI showing us very often signals. So it would have shown a buy position somewhere here, for example, then here, then here. And yes, those were, of course, kind of local bottoms. However, if you see like how far is it, for example, from this low here, which was at what was that, 23,700, up to the top, which was at 23,800. So we're talking about $100 move, which is not some. You should actually aim minimum at like maybe $200 or $300, because you always have to keep in mind you're also paying the fees. $100 minus, for example, was $24 in fees only leaves you with $76. And that also means you need to be able to really precisely always time the exit from those. So you can see here in the down markets, a momentum-based indicator like the RSI doesn't work very well. What probably would work, however, very well here, but this is already advanced, is if you're looking for zones where in a downtrend the RSI goes over 70. But for the beginning, try to keep it simple. So let's have a look at another momentum-based indicator. Very typical one is the stochastic, for example, as well. Stochastic here. Now I like to modify the stochastic always and use the inputs 12 for K length, 7 for K smoothing, and 4 for D smoothing. And so it becomes a little not so wild. And here you can also see, this is not what I wanted, sorry. Here we go. Here you can also see in the sideways trends, when you have like a clear cross of the stochastic either above 80 or below 20. So I'm talking, and I want to zoom a little bit further in here for you. I'm talking about something like this here, for example, or something like this. So really a clear cross, not something wibbledy-wobbledy like you see here, for example. Really like a clean sinus curve, so to say, you could say, from both of us. These are also pretty good in showing you where can be local tops or local bottoms in sideways markets. And if you align this, for example, with the RSI, so we just had this example here, and you see you also had in the stochastic here exactly showing the same signal like in the RSI. If you combine both of those are all most of the time pretty solid signals. Does that work every time? No, of course it doesn't work every time. Nothing works every time, and you have to be prepared if you are trading shorter time frames that you will get more signals that don't end up in profit. This is very, very normal. The lower the time frame, the more false trade usually you will have as well. Good. So this is, we could really go on forever now, but for me important is because I see so many trading beginners out there that try to scalp the markets, to do intraday trading without really having a plan. They just pick some indicator, they read somewhere, oh, this is supposed to be a good indicator, and then they trade. They also trade with too much leverage maybe. So this is really another thing. Just because a platform offers, for example, a leverage of 1 to 200 does not mean that you have to use that. So I just recently did a video where I traded the RSI for a day, just on the basic rules, and it was quite successful. So we ended up with, I think, 11.5 or 11.9% in performance for one day. But I only used, can we see that in the trade history here? For example, I only traded one Bitcoin. I had 10K on the account. So that means I only traded with a leverage of roughly 1 to 2.2, 2.4. Because what you can do is, you don't need to risk it all always on one trade. If you get like, for example, a situation like here, where you have in the sideways trend, the RSI shows you here one time, or you should enter a long position, but then the market goes further down, so you get another signal maybe here. You could split your orders. You could say like, oh, I'm going to buy here one time. If it goes further down, the next tick, I'm going to buy another time, so that over time you can maybe build up 2, 3, or 5 trades. And if you do that with using always a leverage of 1 to 20 or 1 to 50, you will, with almost 100% certainty, sooner or later come into a situation where your account will go to zero because your loss is too high and you don't have the funds anymore to cover the unrealized loss. So you get what is called a margin call. So don't go too crazy. Either do not use leverage at all, that is perfectly okay, or use maybe maximum leverage of 1 to 2. That way you can slowly average yourself in the market. But this is a technique I use. Doesn't mean by the end of the day that it's the correct technique for you. So in summary again, and then we are going to answer some questions here. Depending on the time frame you go to the next higher time frame. So in my case, I was looking at a 5-minute chart. So I went to the 50-minute chart to identify the current trend. To do so, I'm not zooming out too much because because I'm day trading here. I'm only interested in how was the trend here for a couple of hours, not for days. We're not swing trading here. If I've clearly identified the trend, so in my case, I think, well, typical downtrend here, we are seeing lower lows and lower highs. So that's the definition by the book of a downtrend. I have to choose, because it's a downtrend, I have to choose a trend following indicator if I want to scalp day trade on my 5-minute chart. So for example, this can be a simple moving average. A lot of different moving averages out there, exponential, weighted moving averages, different lengths, different colors. I invite you to experiment a little bit for yourself. Maybe you also want to use 2 or 3 moving averages, to kind of get signals from the crosses. Everything is possible there. The important thing is trending market, downtrend in this case, I want to use trend following indicators. Can also be MACD, moving average, convergence, divergence. There are thousands of indicators, really. So if you keep in the back of your head, if you learn from this webinar today, okay, a trending market, up or downtrend, trend following indicators, a sideways market, I use oscillators or momentum-based indicators, like, for example, the RSI, like, for example, the stochastic. If you memorize that and if you nail that down, I promise you will be more successful already than 90% of other beginner traders out there. No, that does not mean that this is a money printing machine. Day trading is also a lot about experience. So the longer you do this, if you really sit down, for example, Mondays to Fridays, I say Mondays to Fridays because I highly advise you to take at least 2 days off to recharge your batteries, because it's exhausting day trading. It really is, takes a mental toll on yourself. But trading psychology, another story that we should cover in a different webinar probably. So if you memorize that, and you know also what is going on in the markets at the moment, and you can find that out, the general layout, for example, from the Telegram channel from the Academy, then you really have done the most difficult part of becoming successful. Everything else then will automatically grow over time. Once you have gotten used to simple setups like this, you automatically probably at one point will start adding more indicators, finding indicators that are more suitable also for whatever your style of trading is going to be. For the beginner, I really invite you, maybe do this for a week or something. Look at the charts, look how indicators behave depending on what trend the market is currently in. All right, enough talk from my side. Let's see if we have some questions here. I'm going to make myself a little bit bigger again. Let's see. Not too much today, okay. United States FOMC, let me show that one from Mariano. United States FOMC is coming in 1 hour. What to expect? Correct, in actually exactly 1 hour. And yeah, this is something the market really is waiting for at the moment. So if we look here now, actually so first of all, the market is afraid. That's why we saw a little bit of a downtrend. It's very typical. The market is anticipating here that maybe the Federal Open Market Committee will hint at that they want to raise interest rates by 75 basis points, so by 0.75% in the next Fed meeting. the next interest rate decisions, typical risk-off scenario again, which means stocks are being sold, cryptocurrencies are being sold. That's why you see the market a little bit on the downside. However, we have really quite low volatility. This looks like such a super move here, but in reality, we had the top here at roughly 24,400. Now we are at 23,400. So we moved by $1,000 at today in Bitcoin, which is not a lot for Bitcoin. This is considered very low volatility for Bitcoin. And we can see this also in the longer term chart here. So we have been in this, what I call accumulation phase for Bitcoin, really for, a month now, to be more precise. I thought here in the middle of July that we are breaking out to the north, out of the squeeze, but we returned into it. So the market does not really know what to do at the moment. I personally expect that tonight, because we saw inflation ticking down a little bit, that the minutes are going to hint at that the Fed is going to become more restrictive with interest rate hikes. So instead of those 75 basis points, probably they are hinting just at 50 basis points. But I could be wrong. Maybe, they think now, well, it seems like if this is working, what we are doing, so we're going to raise by another 75 basis points. If they do that, that means probably we're going to see a stronger US dollar again. Wouldn't be surprised, for example, also if euro dollar really goes below 1.0. So by the end of the day, $1 would be worth more than €1, for example. It's really exciting at the moment, and the markets are, and this is also very typical of a bear market, are highly dependent on those economic news at the moment. That is especially interest rate decisions. This is those FOMC minutes, and especially also inflation data. And inflation data was better last time, which for me is a sign that longer term, we probably have seen something like the bottom. Could be that we see another tick down in the stock markets and also cryptocurrency markets then until beginning of December, but somewhere between November 2022 and Q1 2023, we should see prices rising up again. If that is a bear market rally then, or if this is, the initial take off for a new bull market, I don't know yet. We'll have to wait and see that. So in general, if you are day trading, and you see something like this, FOMC, so this is something I wrote, for example, on this Telegram channel this morning about, do not day trade. At least 1 hour before the release of economic data like this and 1 hour after that. Sometimes you even do not want to day trade the whole day, because if this data comes out, for example, inflation data or interest rate decisions, the markets usually go crazy. And that means your indicators will not tell you the truth at that moment because the price swings are so crazy. So you want to wait at least 1 hour before that, at least 1 hour after that, until the markets somehow normalize again. On days like this, like for example, last time when inflation data came out, I didn't day trade the whole day because I was anticipating that probably institutional players out there that trade much higher volumes and can influence the prices are going to position themselves in market moves that you normally wouldn't have in a market like this. Okay, I've recently... Acid, nice name. I've recently learned about the importance of open interest. Is that something you employ in your trading, or do you have any criticisms of it? I do not like open interest. Well, let me put it like this. I also trade options, not on cryptocurrencies, but on legacy currencies like euro dollar, so forex pairs. But I do not think it is as important as it is made, because there are always two sides for options. So open interest means that on an expiry day of an option at a strike price means where the option can be exercised, the price for that, let's say, for example, 20,000 for Bitcoin, that prices are attracted to this. However, there are always two sides for options. There's one side that buys the option, and for every buyer there has to be a seller also who's taking the counter risk for the options. So those have contrary interests the seller, probably the one that sold the option, wants the option to be so-called out of the money. The one that bought the option wants to have the option in the money, so he can, for example, buy Bitcoin cheaper than the exercise. So if Bitcoin trades at 25,000 and I have an option that allows me to buy Bitcoin at 20,000, well, of course I'm going to exercise the option, because that's $5,000 cheaper than I can buy at the market. Whereas the person who sold the option, if he doesn't have a Bitcoin, he would need to go to the market, buy the Bitcoin at 25,000, and then sell it to me at 20,000, meaning making a loss of $5,000 per Bitcoin. And so there are always two sides. Throughout my whole career, I couldn't find anything that indicates that this is a reliable indicator when it comes to at least trading short term. It's different if you want to trade options, but I don't want to go into this. This gets too complicated. Two more questions here, and then we are going to end today's show. How do you implement risk management and scalping strategies? That is very difficult. So normally on my swing trades, I would always exercise something like, if before I enter a trade that I want to hold on, for example, for days or maybe even weeks, so typical swing trades for a couple of days or a couple of weeks, I want to have a risk-reward ratio of at least 1.5, 1 to 1.5, meaning for every dollar I risk, I can at least earn $1.5, because with this, I only need to be correct, like I think 42% of with all my trades, and I'm not going to lose money. So I'm going to put the math in my favor, so to say, probability in my favor. However, if you really want to hardcore trade on short time frames, on low time frames like 1 minute charts or 5 minute charts, this is very, very difficult to implement there. So you can circumvent that either by just picking trades where you are like almost 100% certain that this specific setup in 90% of all the time leads into profit. Or you have to really search for zones of support and resistance. And you could do so, for example, if you have identified the downtrend. I hinted at this earlier when I showed this. For example, that you say here, I'm going to short every time the price comes close to the moving average, and then I'm going to put my stop just slightly above the moving average. So that is certain. However, that is something you could do. However, it's very, very difficult on those low time frames to really have the math in your favor. So one thing you also could do is, if you, let's say you have $100,000, should you use that all for scalping? Of course not. Maybe just 5 or maximum $10,000. So you only put that money onto an account. So should really something bad happen, you can at least not lose, all of your funds. I think that is very important too. And then what I usually do also is, after a day of day trading, I withdraw all of my profits. So I only always have this base layer of money on my account. However, yeah, it's difficult, and everybody has to find kind of their own way there. All right, last question here. Great question. However, sorry to say that again, Stefan, because it says it shows that you're not only interested in trading, you also understand that in order to trade successfully, you need to have something like a money management or risk management. Absolutely. Leo Bandit, what timeframes do you recommend for scalping? Well, by definition, scalping is probably anything you trade on time frames 1 minute, 5 minutes, 15 minutes, maybe even 30 minutes. For me, usually is everything I do on time frames like 1 minute or 5 minutes. But I know also people who do intraday trading of 1 hour charts or 30-minute charts. It's all legit. By definition, every trade that you take during a day, that you close in the evening, where you do not hold on to is by definition a day trade or a scalp trade. I recommend starting with a higher time frames, and when you see, okay, you kind of get the hang there of what you're doing, you can always go lower in the time frames. All right, good. So 40 minutes already. I think that's enough for today. I hope you had fun. If you had fun and learned something today, please leave us a like. subscribe to our YouTube channel. I'm going to see you again very, very soon, live next time in 2 weeks. But I think I'm going to be live tomorrow also with a friend again called Lip42. So if you want to join there, feel free to do so. And always remember to not go crazy with leverage. And I'm going to look forward to hear from you if this helped you to become more successful with your own scalping strategies.